everyone, and thank you for tuning in again. Today, I wanted to discuss residential clean energy credit. With inflation and everything else that continues to rise costs of normal everyday utilities and everyday expenses, it has become a bigger and bigger topic, especially as now more and more companies are entering into the solar space in order to take advantage of this credit and sell solar panels to consumers. It's not to say that solar panels is bad for you, but it's something that you might want to just weigh out all of your options prior to signing on with a solar company. Keep in mind that the solar company are salesmen and they want to actually go on ahead and sell that product to you. So it may not make sense for everybody in order for everybody to purchase it. We'll talk about some of the things to consider and some of the things to consider with the IRS and under this tax credit. So the residential energy credit, what this is for any qualified property installed between 2022 and 2032 is eligible for a 30% credit. What this means is that anything that you install on your primary residence, this includes solar electric panels. So again, as I mentioned, solar panels, solar water heaters, less common. Wind turbines, again, less common. Geothermal heat pumps, again, this is a little bit less common because those are a little bit more expensive. Fuel cells, same, less common. Battery storage technology, that as well is subject to the credit. So kind of the bigger items here is probably going to be your solar panels as well as your battery storage technology that you may want to do within those solar panels. All those costs associated with that are able to be subject to that tax credit. Now, this needs to be installed on your primary residence. You cannot use your residence for business use. So meaning you can't rent out your home and install solar panels and receive this particular tax credit. It is not allowed for that. If you use it partially for business, you can only use it for up to 20% in order to receive the full credit. Anything greater than 20%, it will be reduced based on the percentage that you use it for business. So just kind of keep that in mind. So like by business use, that would be if you rent out a portion of your home, if you have a home office, that you take the home office expense deduction. Again, those are the items that would dictate to that. So again, that would be based off, use a home office expense, it would be based off a total square footage. So if your office is greater than 20% of your total home, then you wouldn't get the full credit. It would get reduced by that amount. The credit is claimed on Form 5695, and that would be filed in the year that your system is placed into service. Now, for anybody that hasn't done research on this before, there are multiple steps. Step number one is obviously finding a reputable solar company or electrician that installs solar panels. They will go on ahead and pull the permits. They'll install the panels onto your roof, have it inspected within your local building department, within your municipality, town, or county. And then your local utility will then have to come and inspect the system on their own before they'll allow you to turn it on and start producing. So once the local utility provides a thumbs up, installs their meter, and does what they need to do, then you can go on ahead and turn the system on. The solar company will take care of that. And at that point on that date, that would be the year. So for example, if your system got turned on today on January 3rd, 2025, you wouldn't be able to claim that credit until your 2025 tax return. So you'll have to wait an entire year in order to claim that credit. Let's talk about a couple of details with that. Now, there's multiple options when it comes to solar on what you can do. A lot of companies like to install leases, which basically means you don't own the panel. You pay the company a certain rate to lease the panels from them. Panels produce electricity, you get usage of the electricity. And there's also a power purchase agreement or a PPA. Those items are similar, which basically the solar company owns your solar panels and you buy the power from them at a reduced rate. Well, it's a set rate within the contract. The PPA is typically a little bit less of a motivating option, meaning that you don't save as much money because you're still purchasing power from them. A lease, it may make sense, but again, keep in mind with a lease that all the solar credits go to the solar companies. So what you get from your local utility for producing power or any excess power that they provide back in a rebate, that'll go to the solar company. IRS refund or IRS credit, that goes back to the solar company. Similar with a PPA, any of those energy efficient credits, residential energy credits, those all go back to the solar company and you don't receive those. So basically, your only goal for that one would be to reduce your bill on a monthly basis, as well as if you wanted to reduce your carbon footprint by using clean energy. There is an option, again, you don't necessarily have to pay the panels out 100%. You can finance them, and if you finance them, then you are able to qualify for this particular credit. Again, if you pay it out cash, you're also able to qualify. And through financing it, it's considered paid in full when the system is turned on, even though you're still making monthly payments. So pretty much long and short of all that is basically you're just replacing a bill. You're replacing a bill, meaning so if you finance the system, you can probably get a little bit less depending upon your usage of what your monthly bill is, and then you're basically locked in for the next 20 years or however long that finance term lasts for. The rates are generally pretty low. In addition to, you get that tax credit as well on top of that. So now something to take into mind when you're financing a system, a lot of these solar companies will factor in that tax credit, and they'll actually give you an 18-month flexibility window, basically meaning you have 18 months to pay that credit back to them before your loan reamortizes. So that's something you might want to take into consideration. You don't necessarily have to pay 100% of it back to the solar company. You can keep 100% if you wanted to, but just keep in mind that your payment will go up, and they should provide you both forms. If you pay 100% back, and then if you keep 100%, they should provide you both methods so that you know how much the payment is actually going to be at the end. Again, and then just weigh it out. Would you rather have the cash today, or would you rather pay it back and then pay a little bit less to the utility or to the solar company at the end of the day? Another pro with owning your system is you are able to get rebates back from your local utility provider based on what you produce. Every utility provider is different, so you might just want to check within your area for that, and that's not associated with the IRS. The IRS piece of it is the 5695, which is that residential energy credit, and like I said, it's only if you own the system, so just kind of keep that in mind. If you mention a lease or a PPA agreement, you will not receive that credit. So again, you just want to make sure that you double check with that with your solar company when they're doing out your calculation for your solar panels. The other thing that I wanted to mention about this credit is that it's not a refundable credit. So pretty much what that means is you can get the credit up to your taxes, up to your tax liability. So if your total credit, say, is $20,000, but your tax liability is only $15,000, you can only get $15,000 in the first year. So you'll end up with basically a zero tax balance, but it will not refund. So then you'll have $15,000 you get as a refund in 2025 in the example I used earlier, and then $5,000 would carry over to 2026. So again, just kind of keep that in mind as you're shopping out for the panels and setting expectations. You just want to make sure that you know that the total credit that you receive in one particular year cannot exceed your tax liability. So when you look at your tax return, so that amount may carry over, and it may carry in multiple years depending upon the price of the system, your income level, and how much you owe in taxes. Again, it can be a good avenue and a good method to save some money in the long run. They're typically long payouts on them. So, if you're somebody that's a little bit older and maybe planning on retiring and downsizing on your home soon within the next 5 years, it's probably something that you don't necessarily want to do. But I mean, if you're somebody younger or, just in general, in the middle of your career, middle of life, you got kids that are still in school and still plan on hanging on to your house for a while, it's definitely something that I would look into and, see if it makes sense for you. But like I said, definitely shop it around. Definitely get multiple quotes from different companies because at the end of the day, they are trying to make a sale. And you want to make sure that you make the most educated and beneficial decision for yourself, not only from your tax standpoint, but also from your monthly budget and your monthly financial standpoint. Like I said, it can be something that's extremely beneficial, if it makes sense for you. If you're somebody that doesn't use a lot of power, it probably is not that beneficial, but if you have a swimming pool, if you have a heat pump, if you use your air conditioning, your usage is pretty high, it can definitely make sense for you. But like I said, typically on the lower usage systems, usually the initial fixed costs to put it in, are fairly high, and it takes you a lot to get beyond that boundary. So I usually recommend, again, I'm not a solar expert. I've only researched it for myself, and I know the IRS tax credit, but I usually recommend if you had a little middle of the range usage to high usage to go on ahead and do that. But I mean, if your electric bill is around $100, $150 a month, it probably doesn't make that much sense for you to go on and do it. But again, price it out, see what it means, see what the prices are in your area, because prices change from area to area. But again, hopefully everybody enjoys the rest of the day, and hopefully you found this information helpful. Any additional questions, happy to answer them down there in the comments. Thanks.